there are 5 different ways that a plaintiff or a creditor can find bank accounts in order to enforce a judgment. If you have a judgment and you just want to get it over with and get your judgment resolved and collected on, then you want to get a hold of assets of that debtor. And those assets can exist in many forms. There's vehicles, real estate, corporate assets, but because most of the clients that contact us, they just want to go right for bank accounts, in this video we're going to talk about bank accounts. But that being said, keep in mind that more than half of the judgment recoveries that have been successful, that we've been involved in, have obtained recovery from assets other than bank accounts. So this video will only be about bank accounts, but keep in mind that if you're a judgment creditor, you will be more likely to get your money and get recovery from getting assets other than a bank account. So we'll talk about that in other videos. But if you're looking for bank accounts, here is how bank records are provided to a client. All of these methods you as a client could do yourself. You don't have to pay anybody to get you bank account records. If you want to hire an investigator to get you bank accounts, it's certainly fine to do that. We're not trying to talk you out of it, because that's what we do for a living. But we'd like to make you aware that what the investigator is doing is using expertise, experience, and skills to do something that is a professional service, just like computer programming or changing the oil in a car. It's something that is available to be done by a client. Now, most clients don't want to do it because it's very time consuming. It takes a lot of knowledge and instruction and education. But here's how it's done. The 5 different methods are as follows: Swift code access, check verification system, account vetting system, public records, and e-discovery subpoena records. And we'll get into each one of those individually. And we'll also talk about which one of those methods gets the most results, because each method may have different results. You may do a bank account search with one of the methods and it may show 2 or 3 accounts. Another method might show 5 or 6 accounts. And some of the methods might only show 1 account, but it might be something that doesn't show up anywhere else. So if it's very important for you to get full details of a bank account history of a debtor, somebody owes you money, we recommend doing all the searches, because if you only do 1 or 2, you might miss out on finding bank accounts that are holding money that don't show up on one of the methods of searching. Because in reality, if it's important enough to get your money back, it's important enough to do the search thoroughly so the person's not getting away with anything. They're not able to conceal a bank account in a method that you didn't search, because some asset hiders are very clever at trying to hide bank accounts where, unless you do all the searching, they're not able to be found. And we hate to see you miss out on your money because one of the methods wasn't used, whether we do it or you do it. All right, so let's look at those. Option number 1 is the Swift code system. And we've talked about this before, so we won't go into as much detail. The Swift code system is a method where financial institutions, they could be banks, they could be brokerage houses, they could be retirement accounts. Each one of those financial institutions uses a third-party private sector system called Swift, which creates a activity code for every different record on that account. If you check your balance, it creates a code. If you get an interest payment, even if it's 2 cents worth of interest, it creates a code. If you go to the ATM to withdraw $20, it creates a code. If you make a deposit, it creates a code. If you write a check, it creates a code. So every one of those Swift codes has certain information associated with it, and it identifies account holders, balances, the financial institution name, account numbers, and there are methods to accessing those SWIFT codes that can identify bank accounts that have had activity. And you might not think, well, if the person maybe has a dormant account, doesn't have any activity, even something as simple as issuing a statement at the end of the month creates an activity for a SWIFT code. Even something as simple as a tax statement, a 1099, at the end of the year creates a SWIFT code. Why is that important? Well, sometimes people will want to know about an account that maybe was closed. And they want to know, well, how is that going to show up? Well, let's say if you closed an account in November of 2020, 1.5 years ago, 2 calendar years ago. Well, if that account had any type of activity in 2021, maybe it was a settling of the account, maybe it was the bank removing the account from their database, it will create a 1099 record that will be issued in January of 2022. So by using the SWIFT code system, you can sometimes find accounts that are closed a year, year and a half, sometimes 2 years old. Once you get past 2+ years, most bank accounts will not show up on that type of a search, on a SWIFT code search. Most of these bank account search methods are designed to find current, active, and open accounts. What else will it show? Normally it's going to show things like the approximate balance, or at least a balance within the last few days. It may show recent activity, a check that was written, deposit that was made, and other possible activities. Not all of them. It's not like a full account statement, but it will show recent activity. How is that accessed? Well, there are financial analysis firms and record sources that can provide that searching. That's something that you could create the access yourself if you went through the trouble. It's probably, if you're only going to do one search or maybe an occasional search, you probably don't want to go through the hassle of creating that SWIFT system account access and all the disclosures and all the permissible uses that are required for you to get that record. In most cases, you probably just want to order that from a search provider. But that's one of them. Now, if you are going to have a third party perform any bank account searching for you, you want to know which method is being used or which methods. Because if you have a provider doing a search and they're only doing one of the methods, you want to make sure that you have the other methods done some other kind of way. Because, again, if you're not searching all these methods, you're going to miss some accounts. You're not going to get all the bank accounts from one search method. The next method we'll talk about is one that most clients, when they hear it, they're not interested. They don't think it's going to work. But it's the one that finds the most accounts, and that is public records. Every single activity that a person does creates a public record. Vehicle ownership, business operation, employment, residence, whether you rent or buy, creates a record. And it could be something as simple as a deed to a house, a rental application, a utility account, a direct deposit for your employer, transfers from one account to another, loan applications. If you go to a dealership to buy a car, you have to fill out a loan application, tax returns, insurance for vehicle, property, health. All those are activities. Each one of those activities involves connection to one or more banks, either to pay a payment to that third-party vendor or to get payment direct deposited from your employer or to get refund payments or to pay credit card bills. There are literally dozens and dozens of different types of activities that people do every day that involve their bank. And many of those activities create a public record. It could be an auto registration with the insurance. It could be a application for a utility that's a government agency. It could be a deed to a property with a closing and escrow statement. Within those records are references to specific banks, bank accounts, checks with the account numbers on the bottom. Searching of those records is a tedious process, but it's the process that results in discovery of the majority of bank accounts, especially accounts which can be used to recover judgments, because sometimes other accounts that may be in the check verification system, which we'll talk about next, may not have balances to support your judgment. If somebody is hiding assets from you and trying to create a secret account, they're not going to use that account on an everyday basis to be writing checks all over town for going to the store or buying something at Walmart. But they're going to do it on things that they believe are going to be hidden, like insurance or utilities or deeds to properties. So searching all of those, whether you do it or we do it, or an investigator does it, is going to find more bank accounts than anything else. The reason why clients a lot of times will want to do the other type of network searches is they think it's going to be easier and simpler and by extension cheaper. So let's talk about check verification. Check verification is when you go into a retailer like Target or Walmart or Costco, and you go to check out, you'll notice on the checkout stand there's a big sign that says, hey, if you want to pay by check, we use Checks Free or Paychecks, and we've talked about this before. All of those networks have access to the banking system to verify the check. And there are methods which can be used to access through those systems to look for accounts in the name of a particular depositor. And it's a complicated method. You have to have access to it. You have to put through the right kind of inquiries that are legal. You don't want to do anything illegal, because if you search for something in a method that's not legal, first of all, you can't use the information and you can get in trouble. So that's the next method. Now, like we said, if you search one inquiry through the SWIFT system, one through the check verification system, you're going to get different results. There may be an account that doesn't show up in one that shows up in another, and vice versa. The fourth method, or I think we're fourth method right now, is the account vetting process. And what that entails is when you open up a new bank account at any institution, they're going to check you out through a private sector platform, which makes sure that you are responsible with bank accounts, that you don't open up a checking account and then just start writing checks that are overdrawn all over town and bouncing checks. They want to make sure that you don't open an account and write fraudulent checks. The reason why they have to search that is because that information will not show up on your credit report. You can have bad credit, but be good with checks. You also could have perfect, gold-plated credit, but be a check bouncer. Those are two different things. A credit report is for debt, car loans, credit cards, mortgages, things that you borrow money and pay back. Checking accounts and savings accounts are deposit accounts. It's not you're borrowing money, you're putting money in. So that's a different system. And those third parties, again, have methods to access them and search them in order to find out if a particular person or entity has deposit accounts within that system. Again, the results from the check or the account vetting inquiry might be different than the check verification system. All three of those, SWIFT, check verification, and account vetting, have one thing in common, in that it's very likely that the best way for you to do that is to go through a third party. Because if you're doing just one of these at a time, or 2 or 3 a year even, the complexity it would take you to create the access and create the accounts within those systems and know how to put through the inquiry in a way that's legal with the right codes and everything else, it's probably not going to be financially viable. So for most clients, it's better off just ordering it through the providers. Now, we don't recommend any one provider over another. We have certain ones that can be used. There's dozens of them out there. Each one is probably going to cost between $200 and $500. Each one of those searches. So if you do all three, it could cost you, $700, $800, $900, $1,000, depending upon, which provider you use. It's extremely important if you're getting a search from a third party, that you understand which of those methods is being used, or if more than one is being used, that they document which one is being used. Because if you're paying, let's say, $800 for an asset search or a bank account search that covers all three, that's probably pretty good. If you're paying $500 for a search that only does one, then that's not a good deal. Even though it seems cheaper than $800, you're only getting a third of it. And it's still not including the other searches, like the public records and the last one we'll talk about, which is the e-discovery subpoena. So depending upon how important it is for you to get accurate results, you want to make your choice of doing a bank account search appropriately. You don't just want to do a Google search and say, I want to do a bank account search, and here's a company that will charge me $400, fine, bank account search. You don't know what they're giving you, where it's coming from. Is it legitimate? Is it accurate? Are they licensed? Are they a licensed private investigator? Do they have an office? Or is it just somebody in the basement that says, I'll just make up some bank names? Not saying that would be the case, but a bank account search as a search term doesn't really mean anything. It doesn't have a definition. It just means somebody might be trying to maybe search for bank accounts. You want to have it done in a easily identifiable way that somebody can tell you specifically what they're doing to get you that. And is it complete or is it partial? The last one is subpoena e-discovery. And this is through the court system. If you are involved in the court process with a debtor, lawsuit, divorce, probate, anything involving the legal system, the court can issue a subpoena or order for discovery. Again, we're not attorneys. We're not giving you legal advice. Make sure your attorney gives you good advice on this. And that can obtain banking records using basically a court order on the financial system. What we recommend if you're going to do that is not just get bank name and account number, get a full account statement for the banks. So if you're going to get a subpoena or e-discovery or production of evidence anyway, get the full bank statement from the institution, because the bank statement will have more on it than just the name of the bank and the account number and the balance. It will show all the activities going back 60, 90 days. The reason that's important is because each one of those activities by itself, even if it's a debit card charge for $25, will give clues about other assets and even other bank accounts that could help you find valuable discoveries. Does all this work? Will this help you find the assets you need to cover your judgment? Well, part of the reason that as an investigative agency, our PI firm specializes in asset searches is because when we first started our agency, our office was inside of a law firm. We had some space inside of a corporate law firm, and we worked with that firm on a number of different cases. And the first case we ever did as a private investigative agency, our first case, was an asset search. The principal of this law firm, the founding member of the firm, came to us and said, look, we have a client we've been dealing with for a long time. He's a good friend of mine. He has a business judgment against another firm. He was a developer, and he had hired a builder to build some property, and the contract was breached, and there was damages. And the client won a lawsuit judgment for $1.2 million judgment against this contractor. And the contractor swore up and down, got no money, can't pay, too broke, no assets. And the attorney hired us to say, look, can you find assets? We want to look for bank accounts. And at the time we had, had some knowledge and some training in asset searching because we had done it before internally, before we had an outside agency. And in our first case, within 4 days, we had discovered a bank account that had more than enough money in it to pay the entire judgment. The judgment was 1.2 and some change. There was more than that in the account. I won't get into specifics on how much. It was more than 1.2. And we provided the information to, the principal of the firm, our client. They prepared a writ of garnishment, walked it over to the bank, walked into the bank with the writ of garnishment, the judgment, the bank information, slapped it on the counter, walked out with a cashier's check for a full amount. So it is doable. Are they all that easy? No. But fortunately, the first one was a big win, and it showed the value of doing a bank account search to recover a judgment when there's money owed. And this could be the same thing for hidden assets in a divorce, in a probate case. There's a lot of reasons that a bank account search is valuable, and you want to use it properly in your case. Keep in mind, like we said, there are other types of assets to search that many times are more lucrative and more productive than just finding money in a bank account. Sometimes people don't keep all their assets just sitting in cash, laying around in a bank account. They might invest it. They might put it in real estate. Excess cash, people don't leave in the bank because there's no interest on it. You're not making any money. So they put it into some income-producing type asset. So those are the places to really look for big money if you're owed big money. If you're just expecting to find somebody just having loose change sitting in a zero-interest bank account, good luck with that. It's probably not going to be there. But bank account searching is possible. That's a description of what the process is. And keep in mind, if you are a creditor to somebody who owes you money and they are claiming not to have assets, in every single case we've ever performed an asset search, every case without exception, in 20 years history, we have found assets. Everybody has assets. Unless the person is literally homeless in the streets, which is very rare, the person has assets. The question is it worth the time and hassle and expense to go through the trouble of finding them all? Because finding assets is not like a Google search where you type in a name, hit enter, and all the assets pop up on the screen. It's not an electronic search like a database search. It's a labor-intensive search that can take 10, 15, 20 hours of forensics, analysis, records processing, document retrieval, and it's kind of like if you watch, CSI or Law and Order on TV, the forensics people that do this, it's time. It's kind of like you thinking you want to solve a murder case by pushing a button and see who the murderer is. It's a time-intensive process. The reason we say that is because there's a lot of offerings online, internet websites that offer, in quotes, an asset search, electronic asset search for what seems like a cheap price. But if it's not going to give you results, it's probably not going to be worth doing. So do your own due diligence. Make sure anybody who's doing work for you, you find out who they are. Do they have an address? Do they have a license? Can they describe to you how they're going to do the search? If they can't describe in detail how it's going to be done, then maybe it's either not being done or it's not quite what you're looking to get. If a provider of a service is not willing to take the time to explain to you thoroughly in detail what you're getting, how it's getting done, we would suggest being skeptical about that. Doesn't mean they're bad, doesn't mean they're a scam, but we would want you to be skeptical and maybe find out why they're trying to hide exactly what they're doing. Asset searches are great. They can get back the money that's owed to you, If it's your money, it deserves to be in your pocket, not in the pocket of the debtor.